All right, everyone, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, don't forget to give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon and come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Let's get into it this week here. So last week we had that big sell on the tariff kind of headline, and there's been more going on, and I've talked about this. Jason and I have talked about this. We were on top of it as well, but really yesterday, for me here, it wasn't so much about the tariff stuff, and I said that there's like underlying weakness in banks, specifically private equity, more so than banks. Obviously, Jefferies, they took a big hit again this week. Main Street did rebound a little bit, still well off the highs. And ARCC rebounded a little bit here. Jefferies, obviously the big one. Another one, actually a quite large private lender, Blackstone, is going to be closing below its 200 moving average again at the end of this week. So financials in trouble, and regional banks, there's the XLF down. It is rebounding today, but KRE, regional banks, down almost 7% yesterday. It is holding this pivot right now currently, and heavy volume on that, by the way. But, it's now coming out here. We talked about this last week, reverse repo running out. And I've kind of brought this up multiple times here, but, myself and others who've been on top of this here. But SOFR minus Fed funds is at essentially an all-time high. And that's going back to the repo madness in 2019. Right, so somebody's panicking, somebody's dipping into the Fed's discount windows, and reverse repo's out, and it makes sense here, right? And I know I had people telling me this week, like, oh, Jefferies they're only a $10 billion company. Well, that's true, but it's causing creditors, like Blackstone, for instance, to tighten credit everywhere, right? Japan also, I believe, just hiked their margin requirements, their overnight requirements as well. And even today, I actually just read. It's funny, these politicians, they all whine about the government shutdown, like, oh, we can't do anything, but the second Wall Street needs help, they sure show up really quickly. Banking regulators now reporting to propose a plan that would reduce community bank leverage ratio from 9 to 8%, blah blah blah, lowest amount. You get the idea. And it's funny to watch them scramble here. Now, the tariff stuff, again, I like I said last week, I think that's a little bit of a red herring, honestly. I know the algos are selling off of that news, but I think financial problems are way more important than tariffs, and liquidity is the lifeblood of the market. I have a theory here, and, it could end up being completely unfounded, but, if you listen to what Powell has said really in his last couple of public appearances, he's basically hinted at QE. He said that the balance sheet runoff is happening. It's going to happen very soon. And they want to do that. And we all know Wall Street and everybody else wants 50. The mortgage brokers for sure want 50 basis point cuts, right? I mean, at least for me, I don't think that that's going to happen with Micron and Taiwan Semi and Broadcom and these other unprofitable stocks, gapping up 5% a day, AMD, right? Gapping up 5, 6, 7, 8% a day every day. Semiconductors just, at all time highs. They're going to want to they're going to need an excuse to do it. And what better excuse than a good old fashioned repo, crisis. So if that takes place, then the air can come out of this market a little bit here. And we have seen, the market rebound. I said that it was likely we'd see some sort of rebound on Monday. We had a little taco trade. The markets liked that, but they didn't follow through, right? Every time that we've had one of these rebounds into a Monday over the last 6 months, it's just gone straight up afterwards. And right now, sellers still defending that 20 MA on the daily. And again, just to illustrate, if we were to lose, I think I have it drawn on SPY. Well, maybe not. Well, either way, if we were to lose the 650 area on SPY, I mean, that essentially traps everybody who bought from late August until now. So, I mean, if you want to create more shares, create more supply, they can do that pretty easily here. And I know that banking, and I said this last week too. If we do have a banking problem and or private equity, whatever it is, it'll be fast and furious, but it won't last very long. But that doesn't mean it can't be sharp. You know, sharp. They're not going to take too long to plug the hole. I promise you that. But I mean, like, you know, just the margin and all the market makers selling puts to buy calls, like all the signs of froth are here, and you know, that's just the risk right now. So again, maybe it's a nothing burger. Maybe we just gap up Monday and we just go straight to 6,800. You know, it's possible. But I definitely think that their job will be actually, I don't think. I know their job will be a lot easier. It'll be a lot easier for Powell to cut on October 29th by 50 basis points, right? You see an S&P at 62 really fast. I guarantee you that will be on the table. And the bond market right now, TLT, it seems to be pricing that in because, you know, we've got higher lows here and higher highs, and so even at the long end, the bond market is inching up. So again, you know, with the, you know, facility. And by the way, I thought dollars were worthless. By the way, but you know, South Korea now needs a bailout in addition to Argentina. But you know, don't tell, you know, a lot of the macro geniuses out there about that. But anyway, yeah, that's kind of the setup here right now. Cash S&P 6550. We'll call, you know, let's call it 6500, and then SPY, you know, in the 650 area. They're about the same. QQQ 590 is the level. If we lose that, we will slice down pretty hard. So those are the levels that I'm watching there. You know, on the upside, obviously, and not much else to say. I mean, you got the trend line here, which is still holding. We broke momentum there, and you know, if we can, you know, clear that, then you know, it's essentially repaired. IWM made new all-time highs this week, but couldn't follow through. Story of an IWM investor's life. But yeah, nasty tail there on the weekly, by the way. That does qualify as a topping tail. And even though it made new highs, notice how we're not going to get anywhere near the engulfing candle high from last week. So a little reversal there in the banks. I'm surprised IWM held up as well as it did, considering how hard the regional banks got hit. I think October expiry may have had something to do with that. That definitely explains things. But Dow here, it did slice 458 a couple of times, in and out, and it is above right now. So not much else to add there. SMH is still holding up there, just panic bidding tech to try and save this market right now. Although IGV here, cloud, again on the weekly chart, it's still fine. You know, you're still holding the green, and you're above the moving averages. But just seeing a little bit of cracks here. Like Salesforce had a good reaction yesterday, and it couldn't make a new high, and it actually sold off again today. Also, some M&A stuff. Snowflake and Palantir doing a deal yesterday. Both of those stocks gapped up and closed red. I mean, now Palantir, I mean, the chart's fine still, but it's not what we've seen. If we saw something like that, even just a few weeks ago, those stocks would have trended, you know, and made new all-time highs or something. You know, Snowflake wouldn't have, but Palantir would have. So just a little bit of a change there. Transport's, again, a lot of damage there, but it is, you know, is back here, and you can see, again, big level, and they converge right here pretty soon. Talked about rates a little bit. Yeah, 2-year note inching up. It is down today, but it has inched up pretty much all week. So again, demand there at that short end for that liquidity. Again, don't tell anybody who's a macro genius, but anyway, XHB up 2 pennies today. Nothing terrible there. It actually had a nice rebound on was that Tuesday? Yeah, but yeah, still got some work to do. But it did hold the 200. It held the 200-day, and it went right into these moving averages on the weekly as well, and you know, it's getting a quick bounce here. IYR also a little bit of a safety play. Sometimes REITs do act like that, and maybe this is sniffing out some cuts here. As you know, got a nice bounce off of our trend line there. I just don't like how it cleared that breakout bar low on the weekly, but it had a good rebound this week, so I'll just respect it. Talked about banks, XLF. Next stop is the 200-day. After that is $50. Broker dealers, right on that trend line here. So that closed the week below that, and it's hovering right on it right now. And then obviously KRE just took a huge hit. KBE, PNC. Look at Western Alliance. Just got wrecked yesterday, as did Zion. A lot of damage here. Oil got hit as well. New contract today, so it's hard to make too much out of that. The first day of oil's new contract every time, every month, it's always wonky. But it is a little beat up here. It is into some support. I haven't touched it. I'm kind of avoiding it right now until I see this banking stuff kind of blow over. Because first of all, Wall Street will take any opportunity to sell oil, and if there's like an actual like banking problem that could suck liquidity out, that will like, actually give them a legit excuse. And if it gets dumped enough, I might get interested, but I'd like to see it wash out first. I still haven't seen a good washout. I mean, they had a good sell here, but we had a bounce before that, so I'm not buying into that, and that was the right call. It is a little oversold here today, and it's hanging on to that 57 area, but I just don't have much for it right now. I'd like to see it really wash out. XLE is in a little bit of trouble here, so we're working on a bear flag on the daily there, and yeah, I would say it's got to hold 84 on any drops there. XOP that tried to break down yesterday, but it is rebounding today, and it's going right back to that old trend line. So maybe it gets maybe it gets a little fake breakdown kind of rebound. And OIH, this one is so interesting because again, it's still got the same inside bar as the other two ETFs, but has higher lows, and it continues to show this relative strength, even in weakness. So the oil services seem to be a little bit firmer, to me anyway. Dollar index, again, backed off this week. So again, it was more of a risk off type look, right? TLT up, dollar down. But if we really do have some problems in the funding, I would expect the dollar to rally very hard. And I think the market is really offsides for that. So just be careful. Gold here. I would be a little careful with gold here in the near term. There was a ton of euphoria yesterday, and when Globex opened at 6 o'clock, gold rallied 150 basis points in 20 minutes, and it reversed and closed lower. Now, I think the CME did hike margins, so which I mean, when it's going parabolic like this, I guess it makes sense. But pretty good reversal, and I think that volume is like an all-time high or something. It might be. So just be careful with gold here. Please don't chase. GDX down as well. It's still holding the 20-day though. We had silver reversing as well. A lot of volume coming in on silver the last week or two. Platinum and palladium also reversed as well. So precious metals, I mean, they don't need a reason to sell when they're this parabolic. So just be aware. They've had an incredible run. And copper here flat on the day. Lastly, we'll get over to cryptos really quick. Crypto's been a lot weaker here. There's a lot less penning effects that happen in crypto. And believe it or not, I was actually saying this earlier, I think crypto is way less manipulated than the stock market. It has way less, it certainly has way less structured products penning it down in the options market. Because crypto behaved like how I would expect it to if there was a banking problem, and it just can't follow through. It can't get out of its own way here. Ethereum rolling over, although Ethereum and Solana still have higher lows, but they at least seem to be kind of respecting this price action a little bit more, respecting the news a little bit more. Whereas tech is just go up every day, right? But yeah, anyway, Bitcoin here lower low. It's below the 200. If this drops, I do like it around the mid 90s here. So this trend line going all the way back to, what is this, 2024 here? Yeah, middle of the year. And connecting, and then right up there. So that's a point of interest for me. I'm also interested in maybe, I hate that they swept that low on, I was waiting for this 3,600 area on Ethereum for a while, and it got there, but it did one of those crypto wipeouts where it's just only there for 5 minutes and then it rebounds. But the sweep of that down to 32 would get me interested as well. But crypto week, just like a lot of other things here this week. In markets right now, they're hanging in there for the most part. It is OPEX, and so a lot of chop here today. And I figured we'd have some sort of rebound, but until we take this trend line out and we clear some of these levels here. Just be careful. They haven't, and again, who knows? They may announce a bailout over the weekend and everything's fine. But my guess is they want 50 basis points cuts. They want QE, and it's a lot easier to do that from lower than higher. We have the Fed in 2 weeks as well. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to find Jason on Patreon and me on carnivoretrades.com. We'll see you guys all next week.